Hello students, I think you have been following my videos on different topics on different dates. So before starting this chapter today, I'll be telling one thing. If you have any confusion or any ambiguity on the discussions, please do give your comments so that accordingly I will try to respond for the same, clarify for the same. Now today we have brought one chapter that will be very much important for your professional courses, especially CA and CMA courses. You see that this marginal costing technique is such a chapter. It will give you a overall broader view of your cost and management accounting concept. That's why your entire syllabus marks allocation 30% of your total marks have been allocated. Why? Because this chapter have different dimensions and you have to understand thoroughly for your practical level problem solutions. You see that 30% mark allocation means each 3 questions, one will come from this chapter, that is marginal costing and management decision technique. Suppose if you have total 9 questions from your this cost and management accounting paper, so 3 questions from these sections only, that is 30% marks have been allocated for this chapter. So that's why you need not leave any of these sections under this chapter. So write starting from your concept, general problem solutions, and different level of decision making parts we have been given. As you have told in my earlier videos, all these areas have been discussed in phase by phase that have been given in the description box. If you want to recapitulate again, you can see from that link. So now today whatever chapter we brought it, that is also very important, that is under marginal costing, that is make or buy decisions. Before starting to the make or buy decision, we will be discussing in our real level confusions when 2 options before us, be it your family level and social level, then we generally faced confusions which line to action, which line to follow, which way to go. To take an example, suppose purchase a car or take by Ola or rent. See, if you purchase a car, your fund will be blocked. Fine. But if you don't purchase a car, if you take a Ola, and your revenue expenditure will be there. Suppose 5 lakhs you spend, you have running maintenance expenses, your cost of capital is there. Then you have to compare that monthly how much expenditure is there. And at the same time, if you see that in a month, if you take Ola or general other vehicles modes of transport utilize, how much you spend. So that competitive study you have to make it. At the same time, some other non-financial values also take into consideration, standby arrangement and psychological feeling, oneness, all those things. Similarly, whether you purchase a flat or stay in rented house, so they are also same thing. If you purchase a flat, you have to invest a good amount of money, and at the same time you have to give your all maintenance, etc. Monthly your interest burden will be there and maintenance charges will be there. Rather, on the other hand, if you stay in any rented place, just your to monthly rent you can make it and stay there. So you can compare that, which will be beneficial. Here also some non-financial issues are there. Staying in your own purchase room little bit different from staying in a rented room. So that is all psychological thinkings that may not be within your financial concept, but ultimately that has some value. So now we will be coming to our marginal costing, that is make or buy decisions. In which situations we apply that under this marginal costing technique, make or buy decisions. See, generally, if you have so many spare parts portions required, instead of producing, you generally try to purchase or outsourcing from other source. So what will happen in such cases? You need not to run your show, simply just you have to purchase and utilize for this thing. So what are the factors to be considered for your these things? You have to see that in case of these two conditions, that is supplier's price, how much suppliers are ready to give you the price. Second alternative is that the marginal cost of making plus the loss of contributions from the displaced work. You see that if you purchase from outside, your space will be available here. You are getting my point? Suppose if you purchase that parts, so long you are purchasing, your own place will not be utilized. That own place, some alternative way you can utilize, from there some benefit may come. So that's why when you will make your own, you need not to take only the marginal cost of making. You have to take the marginal cost of making plus the loss of contribution from displaced work. You see, when you are making a product, some space you are occupying, some machine you are utilizing. So simply your marginal cost is not there. Instead of making that product, if you could outsource, that space you can utilize from some other source. So that's why your total cost of making is the marginal cost plus the loss of contributions which could you otherwise earn for that. So that is the concept here. So subsequently we will be coming. This plus loss of contribution lost means basically that is the opportunity cost concept. So to start with that, we have taken a problem for this issue. So here one problem is there. Messrs. Ram Industry is considering making its own motor casting, which it currently purchases for rupees 20.50 per unit. This purchase price does not include the ordering or receiving and inspection cost, which Ram estimates to be rupees 2 per unit. Ram feels that it can manufacture the 6,500 required units at a lower cost than it pays by purchasing externally. The relevant costs for both the producing and buying alternatives are as follows. Which are the details given? Incremental analysis for motor castings, because presently he is doing motor casting, 6,500 units. Per unit cost, cost to make, cost to buy. So direct material 6.25 per unit. Total cost for direct material 6,500 will be, you will 40,625. Direct labor 10 rupees per unit. For 6,500 units 65,000. Variable factory overhead 5 per unit, it is 32,500. This is your total cost of making. Suppose if you purchase from outside, your purchase price total cost is 20.50 and total cost of buy is 1,33,250. You see that in case you purchase from outside, as we have given in our problem, your to ordering cost, receiving and inspection cost, etc., that will be there, which is not required for your own factory preparation or production. So in case of buying from outside sources, apart from the purchase price, you will have to add your ordering, receiving and inspection costs, which is being 2 rupees per unit. So that is total coming together 13,000. So in this case, your making cost is total 1,38,125 and your buying cost 1,33,000 is the buying cost, plus your ordering and other relevant cost 13,000, taking together 1,46,250. So from here itself, you understand that which will be beneficial for you, either buy or to make. So now we have to come to solutions for this problem. See, any case of your marginal costing concept, whenever you are doing for some this type of decisions, you have to take some assumptions. You see that. What are your assumptions? Assuming that RAM's facilities will remain idle if they do not manufacture the casting. RAM Industries would increase income by rupees 8125 per year that you are getting from this, from simple 1,46,000 being your this by 1,46,250 1,46,250 minus 1,38,125. So by making the component instead of purchasing it. So up to that it is very simple. You see that from this figure itself it is very much clear. Your buying cost is 1,46,000 and your making cost is 1,38,000. So what you are giving that thing? RAM's facility will remain idle. you see that is very vital, will be coming. See, if he is purchasing from outside, his space will be vacant that time. So what will be the utilizations for that? So that will be coming in the subsequent part. They do not manufacture the casting. Ram industry would increase income by rupees 8125 per year by making the component instead of purchasing. So that is there. So this is one option when you are purchasing, since your making cost is less than your purchasing cost. So next options will be coming when you are making buying instead of buying from outside source. So then what would happen? That part we have to discuss here. So here will remain idle facilities, assuming that facilities idle. So now second options we have to go that. What is that options? If, however, Ram would utilize the idle capacity to manufacture a new product line instead of producing motor castings. That is, what is motor casting? What he is doing, the contribution margin of the new product line must be considered as an opportunity cost. Cost of the make decision. You see that? What alternatives we are giving here in our next page? However, Ram could utilize, you see that, will remain idle facilities. If, however, Ram could utilize the idle capacity to manufacture a new product line instead of producing motor castings, the contribution margin of the new product line must be considered an opportunity cost. You see, whenever we will be discussing the marginal costing technique for decision making purpose, always you have a link up with your opportunity cost concept. So before going to next options for that new line of activity, that is motor casting plus new line of activity production purpose, what that concept of opportunity cost that we understand. You see, what is opportunity cost? Where a choice of one course of action requires that an alternative course of action be given up. You see, you cannot do simultaneously two options before you at a time. So one of the thing you have to give up. So that is the financial benefits that foregone or sacrifice are known as opportunity cost. You see, either of the two you have to accept it. So the financial benefits that are foregone or sacrificed are known as opportunity cost. Alternatively, lost contribution of profit arising from the best alternative foregone. You see that marginal costing concept will not be complete enough unless and until you know the opportunity cost in mind. So you have to be very, very careful for that. So that part we are going that, you see, ultimately any business organizations, he will have to utilize his resources in most efficient and effective manner so that he can increase his total revenue or total profit. So that is the point here. So what is that thing? So that will be given, and in our another example part for that new product line of Ram Industries. You see the estimated revenue and cost data for the housing. What is that housing? That is the new product line, right? As we are discussing there, new product line are as follows. Particulars per unit rupees, total rupees. Sales revenue 4,800 units. Per unit cost is 31.25. These are all problem details. So your sales value will be for 4,800 will be your these things 1,50,000, right? And manufacturing costs which are those costs? Direct material per unit 10 rupees. So your 4,800 48,000 will be, and direct labor 12.25 58,800. Variable overhead your 5 rupees 24,000. So your total this cost will be 27.50, and this will be your 1,30,000 1,30,800 1,30,800. So your incremental profit will be 4 rupees per unit, and total 19,200 will be the total incremental profit. Now we will be in the final level decision part, or the total benefit extra comes that will be giving for this thing. So here we are seeing that your ideal capacity utilizations, your incremental profit 4 per unit, and total profit comes to your 19,200. So we will be giving for this thing particulars, make rupees, buy rupees, right? So this is the thing. So cost of total cost of purchasing motor castings. As we have given earlier pages, 1,46,250, and cost of manufacturing motor casting 1,38,125 plus opportunity cost. You see that? What is the opportunity cost that we have explained in course of discussions of my problem. So that opportunity cost is 19,200. So here your view will be 1,57,325. Here this will be 1,46,250. So finally what will be the situations will come? Finally the situations will come this way. The firm, that is Ram Industry, would benefit by rupees 11,075. How 11,075? 1,57,325 minus 1,46,250 if it elects to buy the motor casting and manufacture the housing new product line. You see that from the entire discussions, one stage you have seen that finally this level your benefit has more. So whenever you are taking any decision by applying your marginal costing concept, you are to see that for that decision purpose behind that, what is the opportunity cost concept utilizations. Without applications of opportunity cost utilizations, your decision will not be final enough, and at the same time you might be losing for some revenue which you could have alternatively can gain from this project. So that is the concept of make or buy decision under marginal costing concept, and thereby it is very, very vital and important for your postgraduate syllabuses, MCOM syllabuses, and definitely your professional courses like chartered accountancy and cost and management accountancy. This decision type part is very, very vital. You are thinking simply that this is the plus minus some figure is there. No. What is the reason behind? What is the philosophy behind that discussion that you have to understand first. In our experience from these things, believe me, in your invigilator in the hall, they may not help you for your marginal costing decision. It will be so tricky type of things will be placed before you. In the exam hall within that 2 hours or 3 hours, it will not be able to click in your mind unless and until you have a thorough and in-depth idea about your marginal costing technique. So we have discussed these two parts earlier. Another video we have discussed your pricing decision. Today we have discussed this make or buy decisions. I will be making another video on this issue of your accept reject decision. That is also very much important, vital for your management accounting syllabus, both for your chartered accountancy examinations and cost and management accountancy examinations. Here one request I will make before you again, before concluding this today's discussion. If you have any confusions and ambiguity regarding to my channel, that is your lighting, presentations and my discussions, any issue is there, please do comment and I will try to explain the same. And before concluding that, one more request I will make it, because since these videos lots of preparations and lots of time involvement is there for, and this is meant for your the student community, so please do subscribe, don't forget please, so that what will happen, whenever the new video will come, it will go to you, and at the same time of subscribing you can share to your others, so that this will be more beneficial to all the people and you will understand the concept for that. For this today, we are concluding these things with the hope to take a new video in the next day on this part, that is your accept reject decisions under marginal costing concept. We are ending the video here. Have a good day.